Who's next? Where does the contagion spread to? Like we were saying last week, we won't know for many weeks, months potentially, but we do know that other exchanges are kind of scrambling here to show their reserves to, ironically, look for audits.
Yeah, there's been a lot of that, Dee, and that is the big question in terms of what all of this bankruptcy fallout from FTX means for the broader contagion and what it means for these crypto markets specifically. We just heard from Binance CEO Changpeng Zhao, who walked away from that deal last week to bail out FTX. He said on Twitter Spaces just about an hour ago that this was extremely surprising to everyone. He says, quote, "If I was writing a fiction, I couldn't imagine this stuff." He also gave some advice to crypto traders and says, if you don't know what's going on, just hold for a couple of years, not days. He said years, and this will eventually blow away. CZ trying to reassure investors that they don't have loans or debt when it comes to Binance. He also questioned the liquidity of some smaller exchanges. Speaking of smaller exchanges, Crypto.com CEO took to YouTube this morning to reassure customers that his platform is solvent in the wake of FTX's collapse. He says it has a tremendously strong balance sheet, as he put it. He claims FTX Crypto.com was not involved in the practices that led to FTX's downfall last week. And it comes after news that Crypto.com mistakenly sent about $400 million worth of Ether to another exchange back in October. We do have some new reporting on FTX with the CNBC's investigative team from the weekend. And according to a source familiar with the company's operations, the quant trading firm founded by Sam Bankman-Fried, Alameda, was using customer funds from its crypto exchange, FTX, in a way that really flew under the radar of a lot of investors and employees. We spoke to sources who say FTX and Alameda kept these assets off of their balance sheet, and that FTX drastically underestimated the amount it needed to keep on hand if customers eventually wanted to cash out. Part of the issue, guys, was the way the exchange was accounting for margin trading. According to one source we spoke to, it allowed clients to borrow crypto from one another. It was not properly tracking the value of those, Dee. But like you mentioned, all of us raising questions about transparency.
Well, Kate, the idea that CZ couldn't imagine this happening, to me, makes me question his judgment. I mean, this is a crypto industry that was having these big blowout events in Miami, and there was this big crypto bull in Miami, and they were crypto Bahamas. Like, those of us who've been around for a while and saw the .com boom and collapse could imagine exactly this. So there's that. Also, very different, I think, the contrast between Jeff Bezos saying maybe don't buy a flat screen TV and CZ, he's not saying don't buy crypto. He's saying this will all blow over. I don't know. There seems to be a difference in these types of businesses.
Yeah, absolutely. He's saying don't buy crypto, and that's its core business. It calls into question what is going to happen for some of the bigger exchanges if there's no crypto trading volume, if the advice from seemingly the smartest people in this industry and someone like CZ, who's running the biggest global crypto exchange at this point, if he says he was caught off guard, you're right, calls into question the checks and balances and the type of due diligence and risk management that's out there. That if this caught him off guard, how can you trust another CEO that's coming out and saying, we don't have liquidity issues, we don't have the type of lending problems that seem to have caught FTX and Alameda off guard? We don't know yet how deeply they knew the risk here, but clearly it caught them off guard if one of the biggest cryptocurrencies they were holding as collateral crashed. I mean, the velocity of how quickly this whole thing fell apart is really unbelievable. It took about 4 days for this company to fall into bankruptcy.
CZ isn't saying don't buy crypto. He's saying don't trade crypto,
yeah,
right? Which
hold
is
it.
what
Yeah.
his exchange does.
Yep.
And now, he's sort of looking for funds to prop up, or not prop up, let's say. I don't know what to call it anymore.
Yeah, right.
Rescue, help other crypto companies. How much do we know about CZ's and Binance's finances? We know that they hold a lot of coins. We don't even have sort of the profitability, the great reporting that you were able to do with FTX, the balance sheets. We don't even have that from Binance.
And even when we did have that from FTX, there were a lot of holes and questions because, this was from an auditor, but there's a lot that they don't have to report because they're not a public company. So the same thing goes for Binance. What we've heard from sources is that they're profitable and that they do a lot of volume, but again, they take more risk than some of the U.S. exchanges. They offer things like derivatives that just are not, allowed in the U.S. at this point. So we do know that they offer things that are not allowed on Coinbase. So the risk profile of a trader on Binance in Asia is a lot higher.